Welcome back everyone. Yet another video on my Robinhood portfolio. I just wanted to share an update after like 2 weeks. So let's look at my portfolio now. So as you can see here, today was a very good day if you compare it to the last few days that we had. I was able to recover all my losses sometime back in the month of April. And after that I have been losing some money and gaining some money, but last week or so has been really good. If you see here, in the past week I have earned close to 2.7%. And if you look at overall portfolio, I am up 4% and making like $500 exact as of today. So what happened since the last time I made a video about my portfolio? I just wanted to share what are my holdings currently and what is my strategy for next few weeks or next few months. As you can see, I have invested in a lot of companies here, but one thing that you might have not noticed is that I have sold a lot of companies as well. So all the companies that were not performing well and all the companies that I thought are not going to make me good amount of money looking at the future, I had sold all those companies. I've increased my contribution to some of the companies that are going to come out of this pandemic stronger, and for some of the companies that I thought will be benefiting from this pandemic, I have included that in my portfolio. So just wanted to share all those changes that I've made to my portfolio since the last time we spoke. So first of all, I still own some percentage of Amazon share, which is doing comparatively well. I think it is up like 3% for me. Yeah, 3.4%. Next one is Microsoft. I've increased my contribution to Microsoft because I believe it is going to come out stronger after this pandemic. They have a very good business model and they have diversified their business model. So I am kind of bullish on Microsoft and just contributing more and more money into Microsoft. If you look at my portfolio currently and contribution, I've been incrementally putting money into this account, as my channel name says, incremental finance. So incremental is what I use for investing strategy. So I have bought 5.8 shares of Microsoft and they are up like 5.6%. My average price is, as you guys can see, 174.97, close to $175. So this is a really good company. I am really bullish. My day job is in tech, so I have more knowledge about their business model and how they are stronger in some areas that they're going to make a lot of money. So one of their business is cloud, as everyone knows. With their federal government contract for JEDI, they are going to make a lot of money out of that. Plus they do have a hardware revenue stream as well, which not too many people talk about. So I think they are going to increase their hardware revenue as well. Plus they still have the software revenue coming from their traditional softwares that they have. So let's look at my portfolio back. You will find few new companies. So one of them is Apple. I had not invested in Apple previously before the pandemic because I always thought it is kind of overpriced for now and it is way above its valuation. And since its valuation has come down, let me show you how much I've invested here. So if you see, I have invested close to $325 in Apple, and out of that I'm making 17.7 or close to 18% up and close to $50. I initially bought this share when it was 177. Then I increased my contribution to it and currently my average price is 275, which is still better if you compare its valuation. Next one is Google. It wasn't there in my portfolio before. I just increased my contribution and bought fractional share of Google. As you can see, currently I own $240 worth of shares of Google and my cost price is 209. So I am up like 15% here as well. So all these businesses I kind of understand. So it is easier for me to invest in these businesses which are into tech because as I mentioned, my day job is in tech. Next up is Facebook, again a tech company. They are making good money and I bought it when it was lower. Then this Trade Desk, I really want to show you something. I have made some profit on this share. This is one of the share. I think it's going to come out really strong during this pandemic and after as well, because this is something that lets small businesses do marketing. So they are going to get a lot of revenue from their marketing division. I bought this share when it was 283. And today, as you can see, it is 317. Actually, I bought this share first time when it was 194, 163, 156, and today it is in 300s. So I sold it previously because there was a time when the news wasn't coming out good about this share, but then I sold it, I booked my profit, and then when I found found out it is going to do well, I just contributed again the same amount. Next is Berkshire. So in my view, Berkshire is one of the best stocks you can have in your portfolio, because even if any pandemic happens, they're not going to lose their value, let's say, to zero, because they already have so much in cash. I'm not sure if you have heard about it, but I think they have close to $150 billion in cash reserve that they can use to invest, or they can keep the cash so that when bad time comes, they still have some money in their account. I started investing in Berkshire way back last year. I think my average cost was like $230, but since its price was going down, I kept on increasing or buying incrementally, and now my average cost is $190, and as of today market price is $185.80. I'm still in loss, but I'm really bullish about this stock. I don't worry about Berkshire Hathaway because I'm getting Warren Buffett as my portfolio manager, the biggest investor of all time. So I've made the most contribution to this company. I have close to $1,300 invested in this company. Not too many for some of you, but for me it is really big amount. Next one is Disney. They are doing good. I am going to increase I'm just waiting for it to fall down again, then I'll buy it, then I'll increase my contribution to it. Then I do have invested in Cisco, because during this pandemic they are one of the companies who are benefiting out of it. I have invested in the share of Broadcom, Qualcomm, AMD and Nvidia. All these, as you know, are chip makers, and as we go forward in 5G era, these are going to come out stronger. So there is no point selling them. I'm just increasing my contribution to them because overall their prospect looks really good, pandemic or no pandemic. After that, I have few companies which are in pharmaceuticals because I wanted to keep some of them. If you guys have been following my portfolio, GURN and CPRX are the ones that I own like from the first day of starting this portfolio, and they are making me good profit. I don't complain about that. Inovio is the company that at one time leading for the vaccine, and I made some profit, and I just sold all the shares. I just kept one share of that. Then you will see some banking shares. So I have a Visa, which is kind of a service provider or transaction provider for all the cards. So Visa I still kept. This is a really good stock. I'm going to increase my contribution to this stock because they are going to come out stronger. And then Synchrony Financial, this is a really good stock. If you guys want to invest in a bank stock that you think is going to make good progress in future, you can invest in Synchrony Financial. I have owned 17 shares of it, and it is up like 17%, close to 17%. I'm making $56 in profit. This is a really good share. Plus, it pays you dividend as well. As you guys know, my strategy is growth dividend, which aligns really well with this stock. And then I have few ETFs. I've sold a lot of ETFs. I just took out all my money from the ETFs because I think at least for now they are not a good buy. What happens in an ETF? Suppose S&P 500 ETF, what happens? It has a group of 500 companies. Out of those 500, not all the companies are going to do good, and if they're not doing good at this time during this pandemic, they are going to do worse and they are going to do really bad. So it will drag down all the good performance as well, and it will drag down the growth, eventually the growth. So that is why I'm not investing in mutual funds or ETFs as of now. I would rather invest in companies that I'm sure are going to make more money. I've still kept few of the ETFs here, as you can see. And then I have invested in this cellular service providers, AT&T, Verizon. This is China Mobile. They are one of the biggest cell phone service provider in China, and they have a very good dividend. That is why I started investing in this stock. As you can see here, their dividend yield currently is 5.34, and they've comparatively held better in this pandemic and doing good. And then AT&T and Verizon, they are not doing too good, but they are not doing too bad. So this is like a no action for me. I don't want to invest too much money into these shares, but I don't even want to take money out of these stocks. So I'm just keeping these stocks for now. So next is gold. I think everyone should own some portion in this metals. I prefer gold in that case. Gold, I'm doing good with investing in gold. This last week or so was not good for the gold because when share prices go up, usually gold prices go down, something like that, and bond and your treasury bonds and all those prices go down. So similarly, but still I'm making like close to 11.5% profit, $30 in profit from gold. I do own like 2.2% of my portfolio value in gold. Then I have this treasury bond as well. So I do own this bond because I do want to keep some money in bonds. So suppose there is another dip, I would profit out of that using these shares, and this is like 3.5% of my portfolio. If you combine both this treasury bond and gold, they make up to 6% of my portfolio, which is a good ratio for now. And after that, I've invested in some energy stocks: Duke, Dominion, VSLR, Era Energy. So all these are really good. If you guys want to know more about any of the stocks, do let me know. But if I have to be bullish for a few of the stocks, Duke, Dominion, VSLR are going to be my top picks. Nextera Energy is doing good, but I think there are better stocks out there. But I've still kept my contribution. I don't want to sell this one because company wise it is really good. It's just that it is not making a lot of profit as of yet. And then I have still kept few of the REITs. If you guys have seen any of my previous videos, REITs were one of the highlights of my accounts because back then it was a good investment. They had very stable dividend payout and it was good for my growth dividend strategy. And after that, there are a few consumer related stocks that I want to go through: Costco, Home Depot, Johnson & Johnson, Starbucks, and 3M. So these are all good companies. I'm sure not all of them are going to make a lot of profit, but they are good stable companies. Even if there is another dip, they are not going to lose a lot of value because they have good solid business model. Then Raytheon, I still think it's a very good share. I want to increase my contribution, but I feel like it is kind of overvalued and I think it is going to correct itself and then I'm going to buy more out of it. And next few stocks are like, I am just keeping those stocks. I have not invested too much in them. I have just kept them in my portfolio. I'm monitoring them and I'm going to buy them in the dips. I know you cannot time the market, but I think there is another dip or two coming in future and I'm waiting for those dips to buy more of these shares. I know it is not a good strategy to time the market, but these are the stocks that I want to buy more, even though they are good businesses, but I think they are kind of overvalued for now. I think there is going to be a dip or two in the future and I'm going to buy these stocks when they are lower. So that was my portfolio in short. Thank you so much guys. If you like this video, please hit that bell icon. Please subscribe for more such videos. I'm going to post some interesting topics in future as well. Please don't forget to exercise today.